In the late 1980s, Japan looked unstoppable. Skyrocketing wealth, booming markets, and endless optimism convinced millions that prosperity would never come. Tokyo became the center of global finance. Property prices soared so fast that ordinary land suddenly seemed more valuable than entire foreign economies. Banks eagerly offered cheap loans. Businesses and families borrowed heavily, believing rising asset prices would continue forever without any serious financial risk. The Nikkei stock index reached historic highs. Investors poured money into shares, expecting quick profits as confidence fueled an enormous speculative financial bubble. Real estate prices exploded across Japan. Small buildings and city apartments were suddenly worth unimaginable fortunes, creating dangerous levels of financial luxury. Spending became a national symbol. Expensive cars, designer brands, and extravagant lifestyles reflected a belief that Japan's economic boom. Behind the celebration, hidden debt quietly accumulated. Banks expanded lending aggressively while borrowers relied on constantly rising asset values to stay financially. Then policymakers grew concerned about overheating markets. Interest rates increased, making loans more expensive, and exposing the fragile foundation beneath Japan. Confidence disappeared almost overnight. Investors rushed to sell, prices collapsed rapidly, and one of history's greatest financial bubbles suddenly burst. The crash marked the beginning of Japan's lost decades, proving that hidden debt and speculative bubbles can haunt an economy for generations afterward. The market collapse erased trillions in wealth. Investors panicked, businesses struggled, and confidence across Japan's financial system began fading faster than anyone expected. Stock prices continued falling for years. Families watched their savings shrink while companies delayed investments, creating a cycle of fear and economic stagnation. Property values also collapsed dramatically. Homes and office buildings lost much of their worth, leaving borrowers trapped with debts exceeding their assets. Banks suddenly held massive bad loans. Instead of supporting new businesses, they spent years dealing with damaged balance sheets and financial uncertainty. Banks suddenly held massive bad loans. Instead of supporting new businesses, they spent years dealing with damaged balance sheets and financial uncertainty. As lending slowed, businesses reduced hiring and investment. Economic growth weakened, unemployment increased, and consumer spending gradually lost momentum across the country. Economists later called this period Japan's lost decades. Slow growth became the new normal, challenging every attempt to restore the nation's economic strength. Deflation made the crisis even worse. Falling prices encouraged people to delay spending, reducing business profits and slowing economic recovery year after. The government responded with stimulus programs and public spending. National debt climbed rapidly as officials tried to restart economic growth and restore confidence. Japan's public debt eventually became one of the highest in the world. The hidden debt spiral continued growing beneath the surface of the economy. Although markets stabilized, the deeper problems remained unresolved. Aging demographics, weak demand, and enormous debt still influence Japan's economic future today. The Bank of Japan introduced unprecedented monetary policies, hoping cheap money would encourage borrowing, investment, and stronger economic growth across the entire country. Interest rates fell close to zero. Even with easy credit, businesses and consumers remained cautious after decades of financial disappointment and uncertainty. An aging population created another challenge. Fewer workers and lower consumer demand made long-term economic recovery increasingly difficult to sustain. Government spending continued rising while tax revenues struggled to keep pace, pushing Japan's debt burden to record-breaking levels year after year. Despite these challenges, Japan avoided a complete financial collapse through careful policy decisions, strong institutions, and remarkable resilience during difficult economic conditions. Japan's experience became a global warning. Excessive borrowing and speculative bubbles can leave lasting scars long after markets appear to recover. Today, economists still study Japan's crisis to understand hidden debt, financial instability, and the risks facing modern economies around the world. The biggest lesson is simple. Wealth built on unsustainable debt can disappear quickly, leaving decades of slow growth and painful economic consequences. As global debt continues rising, many experts wonder whether other countries could eventually face challenges similar to Japan's historic financial bubble. Japan's hidden debt spiral still